Hello again, just doing a quick update. Today is the 1st of October and just wanted to do a little run over of how the dividends have been going, a couple of things that have happened recently and a few little events, like there's been a reverse stock split, there's been a stock split, there was a name change that I only noticed recently. It was a Schweitzer Maudit, I think the name is called, has changed their company name to Mativ, but I'll go into it in a bit more detail in a second. And I've also crossed a couple of big milestones. So as of now, I have just gone over €10,000 in the account, which is kind of hard to believe. You know, the first little bit of money I put into this account was, I think, €27. And I put it into Tesla, bought shares of Tesla just before earnings, like a couple of years ago, 2 years ago. And it immediately fell 20 or 30%. And that was my introduction into how stocks rise and fall. So it's very encouraging to see. Now in the beginning I would have thought that I'd have to wait until I had a large sum of money to ever build up a large sum of money, but you can always start with a tiny bit. Like at the moment, this account automatically deposits €1, or it automatically takes €1 from my bank account into here every day, which you wouldn't even notice missing. And then the dividends will also be reinvested, but every payday I'll invest a little bit as well. But the key to it is just starting. In my own opinion, when you say to people, would you not invest money or would you not try stocks out, a lot of people are really discouraged, which is completely fair enough. You know, if you started investing in the last couple of years, pretty much anything that you bought could have went up. Things were bouncing all over the place. You know, they were selling pictures of monkeys online for hundreds of thousands of dollars. It was outrageous. And I think anybody who starts now will get the same kind of surprise that I got when I started, which was you put a bit of money in and then within an hour it has lost 20% of its value. And I think I actually sold it for a loss at the time because I didn't really know what I was doing. But to make a long story short, it is very possible, if it is within your means of course, but it is very possible to build an account up from literally nothing. But the key is to just invest what you can afford to put aside. Like anything I put in here is not going to be money that I need anytime soon. Now of course emergencies happen and accidents happen, which is a completely different box of frogs altogether. But I mean in general, if you say have €1,000 and your rent is due at the end of the month and you need 1,500, do not go near stocks, do not go near crypto. You might get lucky once, the same way you could get lucky betting on a horse. This is not the place for that kind of stuff. But it is possible to just slowly chip away at it, bit by bit, and it will build up. So the next big goal, of course, is to double this, to get this up to 20,000, which is going to take quite a while. But the kind of end goal that a lot of big investors have is 100,000 invested. And the reason that is because if you are in the market long enough that the early money you put in has started earning a larger dividend yield because it's been in so long, if you ended up with earning 10% of what money you would put in, that would be 10 grand a year income. If you have 100 grand in, you earn 10% a year. That's 10 grand without putting another penny of my income in and without touching it. So that's the first major goal. That's when, as Charlie Munger said, that's when you can kind of take your foot off the gas a little bit and relax with the investing. But I suggest that you don't do that. If you have the means to continue investing after you hit 100 grand, you should definitely keep doing it. But that's the first massive milestone. 10 grand is a lot of money. And I've also crossed €300 in dividends so far. And I think the first dividend I ever received was for 1 cent. So it's getting there, bit by bit. Now the dividend payments themselves are starting to increase, which I'm very happy about. Now that's over the €1 limit, which is one of my goals, to get every company, which is now 660 companies, to get every one of them paying €1 or more per dividend payment. So it seems to be, with a lot of companies, it's about €100 in will pay, if it pays 4%, which is a healthy dividend, it will pay €1 4 times per year. First major goal of like the project itself is €1 per dividend payment. And then I'll build it up from there. But how I've been doing it is just kind of mechanically. I don't look into each company very deeply when I'm making a decision any day to put money into it. I will usually just organize them by whoever's doing the worst and then make a decision from there. So let's say this one, DigiHouse Technology, was one of my kind of gambles on a growth stock, and it's in the crypto space. This one is 80% down. Yeah, it's a bit of a disaster. It's now 70 cents a share and it started out close to $5 a share. So, disaster. Won't be putting anything in there. Varta, to me, this would be a good place to put a few euro because I only have, €7 in it and it's 73% down. So, how this portfolio works, I would take a tiny chunk. If I got €300 that I could invest from a month's paycheck, I would put maybe 10 in here. And I would scroll down a little bit. Adler Group is too risky. Loyalty Ventures, also kind of risky. Now I'd just go down through them and make a decision based on how much I already have in and then how much it's gone down. I'll put a few of them in there and also into these pies. So at the moment the UK is having a pretty rough time, so that's where I'm going to be investing my money, especially into these first. I did a video breaking these down yesterday and I have another pie for the 2022 UK Dividend Aristocrats, but these are just some of the top dogs of the UK dividend scene, and then the same in 2022. So when I get paid, I'm going to put probably 100 into here, 100 into here, and divide the other 100 in maybe 5 or 10 euro pieces across all the stocks that have been crashing quite severely. If you are starting out for the first time investing in dividend stocks, do not follow this strategy because it's quite a lot of effort and I'm not sure if it's going to work. It can be pretty confusing. This kind of method that I've built up has been from trying the normal ways, which is maybe picking 10 stocks. So I wouldn't recommend it in the beginning. If you just want to put money into a dividend stock and not look at it again, I would get what's called an ETF of, say, the S&P 500, which is the top 500 companies in the States. Or you can get the FTSE 100, which is the same in the UK. And there's some for lots of different countries, depending on where you are and what you're interested in investing in. So a couple of new additions into the portfolio are this company, United Utilities Group, which will be added in when I get paid, which should be in a day or two. This is part of the UK Dividend Aristocrats of 2022. So that's going to be introduced into this collection. United Utilities Group and Homeserve. I don't have either of those. So this is the first one, United Utilities Group, and the ticker symbol is UU, and it seems to be a water and wastewater company. It's quite large, about 6,000 employees, 5% dividend yield, a little bit of a negative earnings per share. But as time goes on, we'll see why it earned its place in that list of UK Dividend Aristocrats, and we'll see what the future holds for it. And the second one is Homeserve. The ticker symbol is HSV, and it's in the construction services industry. It's engaged in providing home emergency repair and heating installation and replacement. Also quite large, about 8,000 employees. Dividend yield is kind of low, 2.2%, but I would call that safe because they don't have to pay an outrageous amount of money out in dividends all the time, and they also don't have to cut their dividends. So once I have incorporated these into the portfolio and then added them all into the payday calendar and the portfolio spreadsheet, I'll do an individual breakdown on each one. The next piece of information that has changed is that one of these companies has changed their name and their ticker symbol, which has happened a few times. Schweitzer Maudit, I think is how you pronounce it. This is the spelling of it. They have changed their name from this and their old ticker symbol to now Mativ Holdings. They're a specialty materials company, so they're in the plastics and rubber industry. So I'm not sure why they've changed their name, but it has happened quite a few times. Next small change was this company, Annal Capital Management, has had what's called a reverse stock split. The ticker symbol is NLY. And what this means is they've essentially consolidated or combined the shares that did exist into a smaller amount. So unfortunately, what happens is if you have, say, 5 shares of this company and they do a 5-to-1 reverse stock split, you then end up with 1 share, but it's worth 5 times as much as it did before. Now, there is lots of reasons why they would do this, but it's generally to put the price up on the screen. Like, it kind of doesn't really affect your position that much, but generally companies that are not doing great will have a reverse stock split. I've also seen it now. I don't know if this was a kind of tactical decision by a different company, but I've seen when a dividend was due, they paid the dividend in additional shares, and then within a week they did a reverse stock split. So they gave you shares as a dividend and then reduced the amount of shares by, I think it was 3-1. So what happens is the one share that you're left with is worth the same as the last pile of shares that you had. But now when people look at the price on the screen, it looks a bit healthier than it did before. It looks a bit more propped up. And Nintendo, they did a 10-1 stock split, which is the opposite. That means that every one share that I had of Nintendo has been turned into 10, but the price has also been divided by 10. So the price before was, I think, €440, and I had 0.03 shares, I think. I had a small amount of money in anyway, and now I have 0.3 shares, and they're worth €44 per share. So what they do here is this essentially makes room for new investors. So when people see Nintendo, they don't say, Jesus, I can't afford €440 a share, or maybe that's a little too high, so I'm not going to invest in it. But now they have multiplied the amount of stocks by 10, which means the price has been divided by 10. So new people that come in will see Nintendo and how much they make, and experts would know that this doesn't really make a difference. They would work out what the price is worth based on the amount of available shares. But new people who come in would say, oh, well, Nintendo at €44 seems like a steal. And it kind of makes space for new investors. And the final thing to talk about at the moment is how the different currencies, I'm kind of seeing the effects of investing in different currencies in different markets at the moment. So what happened recently was the dollar, the euro, and the pound all became par with each other. They were all worth one of each other. And I saw somebody explaining currency to me. I never really understood currency trading and how they kind of value currencies. It just didn't really make sense to me. But I heard somebody explaining it and it all kind of clicked. It all fell into place for me. So how it works is if you have a chicken, you have one chicken and somebody else has a cat, and you want to trade your chicken for a cat. One chicken is worth one chicken and one cat is worth one cat. But between yourselves, you can decide that this is a fair swap. They're worth each other. And although they might not have the same value, you kind of decide the value of the currencies between yourselves. The same thing happens with fiat currency. So a euro compared to a euro is always a euro. So when the euro crashes in value, if I invest my money into another company that's valued in euro, I don't really see any difference. There is no, I'll show you on one, there is obviously no foreign exchange rate on euro to euro. Look at this German company. So my account is in euros and this is a company that's in euros. So it's just what I put in and how much the price has changed. That's the return. But now when I look at any American company, we can then see how the difference in value between the euro and the dollar will also affect your position. The position itself has gone down about 17%, but because of the foreign exchange impact, that has gone up about 13%. So now I'm only 3.5% down. So how that works is the euros that I essentially traded for dollars when I bought this position, my euros have become less valuable compared to the dollar, which means if I sold this, which would then be for dollars, I would get more euros. There's people who will explain this 100 times better than me, but that's how I've made sense of it in the last couple of days. I saw a couple of great videos that explained it and it all kind of clicked for me. I always wondered how foreign exchange worked and couldn't really wrap my head around, how completely unpredictable it seemed, but it's similar to stocks. It's like the value of currency depends on how many people are interested in the currency. And because the dollar is the world reserve currency, it's very, very popular, of course. Now, what this means on a day-to-day basis is that anybody who pays dollars to, say, import their stuff for a business, but they're based, let's say, here in Ireland and they're using the euro currency, they now have to spend more euros to import their stuff in dollars. So anyone with a business sense will raise their prices in order to cover that cost. Otherwise, they start going into the red. And that itself can cause businesses to fail. If, let's say, Netflix was based in Ireland and they were importing their shows from the States, just as an example, and then all of a sudden the euro was worth a lot less compared to the dollar, and they then raised their prices a load, a lot of people would say, look, I'm just not going to spend my money on that anymore. There's more important things happening. Inflation is in double digits. This is an expense that I can't really afford at the moment. Netflix profits start going down and the shit starts hitting the fan, so to speak. So it's just another factor that you have to keep in mind when you're investing, is that the currencies of the world and how they change in value in comparison to each other will affect your positions. But if you're, say, based in the United States and you only invest in American companies, you won't really feel much of a difference in the stock market because a dollar is always worth a dollar. But that's pretty much it so far. There's pretty uncertain times ahead. Now, if you're in the YouTube finance space and you're watching videos quite regularly, every time there's a 2% drop in the market, all the videos come out about how hell is approaching and the whole world is going to explode. Now, that's quite normal. But anyone who is unsure whether or not the global economy is slowing down or whether or not their country is in a recession, if you're in Europe, yes, there is a recession beginning. Same in the UK. The States, not yet, but I would imagine that they will soon follow. It's only my opinion, of course, but that's what I feel is going to happen over the next year or two. All the money that was handed out when everything was locked down, it will now start rearing its ugly head in the markets. And at the moment, I'm going to invest my money into the UK because it's crashing the sharpest. And then after that, I'm going to start putting money in here, which is the Noble 30 of 2021. And these are some of the top European dividend stocks. So that's pretty much it. Just keep in mind that times are uncertain, and of course, don't invest anything that you cannot afford to lose. And most importantly, try to navigate your way through this market as best as you can. Try to keep as much factors in your head as possible, and then do as much research as you can. Safety first is how I would sum it all up.